Hey everyone, it is Evan here from the Trade Risk on Friday, December 7th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we are wrapping up a pretty painful week here for the bulls, we're racing essentially all of last week's progress to the upside. That reversal week that we saw last week has been given back, and in some cases and then some. If we look here at some of the major averages, you can see 5-day change back firmly in red territory. It was a rough day on Friday here to finish off the week. We are below all key moving averages again, and in fact we are actually below last week's lows in the S&P 500, the IWM. Those two of the major indices have weekly bearish engulfing bars that were printed this week. We'll talk more about that when we look into the chart. So really not a lot to like here for the bull case. You can see we are right back into red territory. It's quite the yo-yo market. Last week when we were doing a recap, we saw all the nice positivity, the rebound, all sort of, encouraging, frothy upside move, and now we are giving it all right back, and we can see volatility out of all of the major markets is now leading the charge here. The VIX up 23% over the past 5 days, equity and risk assets here at the bottom. So let's take a look now at the charts. We're going to try and approach this as objectively as possible. We're going to start with our weekly view. That's where we like to start for the S&P 500. We finished lower 4.42%. I believe that took us back into negative territory for the S&P 500 year to date. And you can see, as we mentioned at the top, we have a bearish weekly engulfing bar. So that is a bearish pattern. That means we gapped up, we opened above last week's highs, and we closed entirely below last week's lows. That means we engulfed all of last week's trading, and we did it to the downside. Now, we didn't see heavier volume this week, and that's probably because we saw a short week. Markets closed on Wednesday, so we missed a day of trading in there, but certainly sellers didn't miss a beat. They were out here selling this market down, and we find ourselves back down to the lower end of this range. So we've sort of sound like a broken record here on a lot of this big macro analysis as we continue to be below this key major trend line that extends from the 2016 lows. We're seeing volatility expansion underneath that trend line. That is generally a bearish characteristic, but notably here, I'm going to take the other side now and say that structurally we still have not changed or moved out of this range. So as bearish as this week was, we still don't have a structural follow-through day below these recent lows here. We're still playing yo-yo in this range, really just kind of churning up traders at both extremes. So for you bears out there, a good win for today, or this week I should say, in this range. Now let's see if they can get follow through. That's what's been hard to find, and we're going to need that follow through below, call it 2620, 2600, below all of this structure here, and then we're going to keep an eye on the year-to-date lows we made back in January, February, around 2533. That would be the next big sort of target or level of interest if we start to get that follow through to the downside. So that's that's sort of what we're looking there at a high level picture. Still a cautious market, and not to sort of point out the obvious here, but you aren't tuning into me to hear or to be surprised that things are bearish out there right now, right? We all sort of know that this isn't this isn't any new piece of information here. We know volatility is elevated. We know things are in a tough spot right now. The more interesting part, and this is just really a rhetorical question, it's hard to know, is that given where we closed right here, everybody understands that we're sort of on the ledge here, but how many people have taken defensive actions, right? In other words, how many people have raised cash here that are tactical, that are active, that are maybe hedged up? Maybe you're already short the market, or you certainly don't have a lot of long exposure on. If everybody's looking at this ledge here saying, oh boy, bearish engulfing bar, this is what's going to take us to the, this is what's going to roll us right over, that's when then, you know, if everyone's on that one side, we can get that springboard back up. Not saying that that has to happen. We can easily find follow through next week and cut right through here. I do think it makes sense to be defensive and very light right here. Depends on your time frame, of course, but I think it makes total sense. But when we think about the psychology of the market and these ranges here, is that sentiment gets extreme on both cases, right? Everybody wants to be bearish right here. Everybody wants to be bullish right here. And you know, that's where in these volatile trading ranges, you can get that quick snapback until it just wears everybody out, and then eventually it breaks through after, you know, really people have thrown in the towel on both sides. So that's what makes things tricky. That's what makes, you know, cooler heads prevail and kind of staying as resilient and just keeping the psychological capital at a maximum. But that's sort of the landscape that we're looking at. Let's sort of jump down into the daily chart here, and we'll go over to this other view, switch it over to the SPY chart, and you can see here it's basically just the elevator down this week. We started off the week right in here on Monday with that gap up, and we had this horrible session on Tuesday. Markets closed Wednesday. We saw the reversal, intraday reversal staged on Thursday from about 3% down to flat, and then we rolled right back over on Friday, closing the week at the lows. So down at 263, here we are again. Buyers have stepped in now twice before this in the past 5 or so weeks. Can they do it a third time? Do we get some flush below this low here and then some type of reversal? Nobody knows, but this is the time where it certainly still does, as we just ranted there a minute ago. It still does pay and make sense to be cautious here, because this is where we would expect capitulation to happen. But if everybody's cautious again, you know, that snapback rebound right back into this range here is something that we need to keep our you know, minds open to for an open possibility. And this is why it makes such a difficult trading environment here, is because emotions and volatility is high, and when we're in these ranges like that, you know, it's tough to you know, it's really tough to navigate them unless you're really tactical, active, and have experience in these types of markets. So S&P 500, 263, all the way down to 261 or so. That's the area I'd be watching. And then all the way down here, nice big air pocket, 253. That's the next major level. There's certainly some structure in here before that, right around this 257 area, that 258 area. You know, that's where we chopped around in April, March of this year as well. But really, it's that year-to-date retest that I would be looking for if we continue to slice through this support area, this current area, into next week. On the upside, of course, you know, 270. That's kind of the midpoint of the range right now, sort of point of control. It's where we ran into at the beginning of today's session on Friday, and we reversed from. If we can start to get back above 270, then we get through the midpoint of the range, and then we start to look our sights back around 280 or so. So that's the playground that we're in. MACD still trying to stay positive here, and not positive, but in the value sense, but in the positive divergence sense. As we continue to hammer on the lows a third time, we can see sort of a higher low get put in there on the MACD. On the daily chart, of course, you look at the weekly chart, and we're still making new lows. So know where you live, know your time frame when you're looking at that. IWM here, this is still the kind of worst case, or bear case, I should say, here with the IWM. You can see on the week it was down 5.63%. Really ugly session, engulfing 3 weeks worth of trading in this week's session. Slightly higher volume despite the low, despite the short week, and we did make new weekly closing lows below this structure. Not convincingly, we're not far away. Still needs a follow through week, but still this is now very much, and has been, the weaker of all of the major averages here, as it continues to now lead on the downside. It's going to need a very quick reversal right out of the gate next week. That's what you're going to want to see if you're in the bull case. And if we do get that kind of gap down, or we get some capitulation or follow through, of course that spells pretty ugliness there for the overall market. NASDAQ 100 is slightly trying to hang its hat on kind of most improved here, showing a little bit of relative strength, still down almost 5%. So it was a pretty horrible session. Outside reversal week didn't quite engulf last week's lows here. We did manage to hold last week's lows. I don't know if that's just because markets ended up closing, wasn't enough time to get the extra selling in, but regardless, still a pretty ugly week, but still holding above some of the past 5 or 6 weeks lows down here around that 160 area. We'll see if they can do that again or save it again next week. So that's the market environment overall. I think I covered everything. VIX is back over 20. I believe it closed around 22, 23. Yeah, a little over 23 there. So VIX has got a nice pop in it this week, almost 30% to the upside. And one of the things that we'll talk about as we go into some of the major assets here is TLT. And when we did see some real kind of rotation into those safety haven assets this week. TLT getting a strong bid to the upside, 2.67%. We touched on this on Tuesday's midweek video as we did climb above here. We wanted to see a strong weekly close. We got a strong weekly close. We are back above this key support level, which goes back many years, that we broke down from back in September of this year. And that is pretty encouraging to see. We still have the MACD on the weekly chart in negative territory. It is trying to rise higher. If we go down to the daily chart now for TLT, you can see here good volume coming in. We had that kind of gap and go in terms of the ETF back over this major support area. So this is looking pretty interesting here for a structural sort of rebound back into this old range. Very quickly could be back up around 123 or so if this sticks, and especially if we continue to see fear in the market. And we'll go to GLD next, which is also considered to be sort of a safe haven asset when equity risk, when there's risk out there in the stock market. Gold, treasuries, these are things that tend to do well in those types of environments. And we did see kind of the biggest acceleration to the upside we've seen in a little while here in GLD, 2.21%. Structurally, I mean, it didn't really change a whole lot. We're in this short-term uptrend. It's kind of messy, but we're working our way higher here. We're over that 115 area. That was the short-term level that we were talking about for many weeks. So we are clear a ways away from that, and we are taking out the highs made in October. So the bulls continue to parade here to the upside. This structurally had been in a very tough space, very similar to TLT. Both of these asset classes were in rough shape just a couple months ago, or in the past few months, and now they're starting to get some life found in them, as they seem to be the best house of the bunch as equities sell off. So GLD rather, short-term trend to the upside, looks to be providing that safety haven quality. We'll see if that can continue. It's tough to want to fight it right now. I don't see too many reasons in the short term anyway to be a bear in gold. If we start to break trend here, and if we start to break below 115 or so, that would change my opinion there in the short term. Silver continues to move sideways channel, $13.10 to $14. It's been established for a while, continues to hang out in here, so nothing really new to say for silver. USO, let's see how it finished out performance-wise on the week. It was up 3.5%, so, ignoring the equity sell-off, USO, the commodity here, oil, is managing to try and stabilize. It, of course, was crushed over the past, 6 or 7 weeks, so a little bit of sideways here is encouraging. We still don't see, a major lift-off here. I know headlines have been circulating on further cuts of supply in here, and, I have no real good insight into any of the economic factors at play there. But from a price action perspective, we've seen the major selling at least sort of dissipate or quiet down for now. We didn't get that very violent snapback. We're getting more of a sideways move through time to slightly higher. You can see the MACD trying to rise here, but we did break above this accelerated sell trend line that we were in for past couple of months. doesn't know, really hasn't meant a tremendous amount just yet. So active traders, you can have fun here. Structurally, swing basis, still not seeing a whole lot. I suppose if we continue to hold above this trend line and these recent lows, then if you're really aggressive and you're looking to play some reversion with risk-defined strategies, I guess that can make sense. But for me, just watching, spectating right there. Natural gas continues to consolidate. It is mostly spending its time moving sideways through time, not a big price correction. It had this great run up in November, and it's really just kind of making lower lows and higher lows at this point, and we're waiting to see. It's pretty coiled right now, so we're waiting to see above 38.30. I've got to imagine is going to unlock some momentum to the upside, and if we start to roll over below $34, give or take, that is where we might get a deeper retracement. So pay attention to that next week. I think this one might be back in play. So that I think covers all of the major markets. Let's look at some of the sectors. Let's take a look at what tried to hold up this week and what really let us lower. On the upside, it was utilities, defensive theme here, of course. This is what worked itself higher this week, 1.57% on the week. So nice bucking the trend there. Some good kind of just consistent buy volume coming in here and really trying to stay resilient in some of these kind of safety assets here, rate sensitive assets that tend to do well during market corrections. Staples, this is another spot which makes a lot of sense. It was still down this week. You could see it was lower 2.74%, right back to last week's lows. But, on a relative strength basis, it's doing much better than the broad equity market overall, especially over the past, month or so of trading. It's just kind of holding up here. No real actionable pattern that I can discern there for the ETF. Third best performer this week, which really, was still down 3%. So it's hard to say this was a best performer, but on a relative basis, this is what we got. And it's energy. That makes sense. We got oil at least trying to stabilize, gas stabilizing. So that area of the market is at least holding tight right now. It's still in a pretty ugly pattern here, all things considered. But if it could hold into this 64 area, if it can continue to find some support around 64 and under, then, maybe we have the start of a more convincing kind of support stepping in here, but we'll have to see how that shakes out next week. MACD continues to sort of positively diverge there as price tries to inch lower, MACD trying to inch higher. On the downside, financials absolute dogs this week, down 6.9% with a, you really can't get a more horrendous looking candle than what you see here. Heavy volume, bearish engulfing bar that encapsulates the past 3 or 4, almost 5 weeks of trading from the top end here above this support line, right when it was starting to look good. This is exactly where you'd want to see financials start to find a bid here. Last week, they started to turn themselves up over this 26 area, and then they just completely, reversed all of that action and then some, and closed at new weekly year-to-date lows. So really, really horrible action there. Maybe a short-term capitulation, maybe some type of bounce early next week, but structurally, really need to be all the way back above 26 or so. $27 to get too excited there. XLI also bearish engulfing bar here, huge range encapsulating the past 4, almost 5 weeks worth of trading as well. New year-to-date weekly closing lows for XLI. It's back to a pretty significant area here around this 67.50 area. It's where it bounced back in the first week in November. We'll see if we get follow through. Is high volume, maybe capitulated a lot here. So again, short-term bounce to the upside, but then where does it go from there? And finally, semis. Also, very key areas of the market here, financial semis. Never good to see both of those working lower. Bearish engulfing weekly bars on both sides, coming at a very crucial area here. This is where all the overhead supply was. This is where support came in around this 96 area for quite a while. We broke down from that in October. We chopped around, we tried to get above it, and then we got this big bearish engulfing bar. So pretty ugly action there as well. So when we look at it overall, not very pretty. Got to see if we can get follow through out of the bears now on many of these bars, because things look pretty horrendous on the weekly time frame here. It's a time to be defensive, but Depending on how active you are, you're probably loving this action. If you're a short-term trader, volatility that just did not exist in 2017, and we're certainly getting our dose of it in 2018 now as we round out towards the end of the year. So that is what I got. That is what has been going on here in markets. Hopefully you guys are not getting too chopped up here. It's a real tough market environment. I certainly took a couple of attempts at playing some reversals this week. Got slapped on the hand on both times on each of those trades that I tried to put on to look for some tactical upside opportunities. It's just not here yet. It's too easy to get chopped up. So be defensive, save that mental capital, coast into the year end, and start the year fresh if you need to. There's no harm in waiting for an opportunity and just sitting on some cash. So that is it. A little bit longer this time. Thanks so much for tuning in. Congratulations if you got to the end of it. Every Tuesday and Friday we do these market recaps. You can subscribe on our YouTube channel or follow us on the blog, traderisk.com/blog. Thanks so much, and talk to you guys next week.